Regular listeners of On the Money would know that we've covered numerous stories about cryptocurrencies, blockchain technology, and other digital assets. And that listening to those who talk in technical terms, they believe that it will revolutionize world finance and the way our markets function. Now it looks like the first steps towards that may be taken. Mid-sized accounting firm BDO has announced, in partnership with blockchain specialist Decentralized Capital, that they will be, for the first time, an accounting firm in Australia providing auditing and assurance services for cryptocurrencies, tokens, ICOs, tether coins, and other assets traded via blockchain. Blockchain is going to be pervading all aspects of our economy, affecting everyone from mum and dad investors to the big institutions. So, what does this mean for you? To answer this, I'm joined in the studio by BDO's Associate Director of Audit and Assurance, Jeff Rooney. BDO is one of Australia's fastest growing mid-market accounting firms, and with this announcement is positioning itself to be the go-to auditing firm in Australia for blockchain. Also joining me in the studio is the founder of Decentralized Capital, Stephen Moss. Decentralized Capital's focus is on institutional-grade digital assets and services, and together these two firms could be the first in Australia to provide genuine credibility to this emerging space. So to start, Jeff and Stephen, how did this collaboration come about?
Effectively, look, going around, talking to different clients, and from a BDO perspective, we're doing a lot of work with clients in the fintech and technology space. So, time and time again, people are asking questions around, blockchain, cryptocurrency. There's some confusion between what are they? Is it too risky, especially with the rise and fall of Bitcoin prices, etc. So, really, it then became quite clear to us that from an audit and assurance perspective, there was a need for there to be a professional firm with a good global brand to be providing audit services in the space. And so then started having a conversation with Stephen from Decentralized Capital, also in the area, and were crying out that there was a real need for the service as well. Stephen, I know we've had a lot of conversations over the last sort of few months and years around why there's a need, and Decentralized Capital themselves had a need in the space.
It's refreshing to have BDO involved. This is not an easy discussion to have, and especially for a large firm like BDO, it's not an easy process for them to essentially launch a new division in a new marketplace. And the thing I've always respected about BDO is they are market leaders. They are leaders in terms of listing companies on the ASX. And this is an industry now where a lot of companies considering or having considerations around raising capital are now throwing up possibilities around doing their own ICOs as opposed to listing. And for BDO to put a foot into this industry is pretty important. I think in terms of preserving their market share and also potentially being leaders in this space. So I'm really excited to work with BDO and the team there. I think they're the right people. If we go back and understand blockchain, blockchain's essentially decentralizing networks. So, and what does that really mean? It means, as opposed to if you do a money transfer or transfer an asset, you typically transfer it through a bank or a centralized registry or a stock market, which has a centralized registry. Blockchain is essentially decentralizing that. So it's like a spider web. You've got thousands of computers around the world that simultaneously have a copy of that registry, and for that reason, a transaction can't be denied or stopped, and it brings real security to users. And I think the whole cryptocurrency industry has misled the general public, and the word cryptocurrency is probably it's probably a little detrimental to the industry, because essentially the industry isn't about cryptocurrencies, it's about the technology. And we've seen sort of phase one has been cryptocurrencies, or these tokens trading, and they're speculative and they're not backed by anything, and about 80 or 90% of people that own it don't really understand the technology behind it. But what we're seeing now is a new phase emerge where assets are being listed on the blockchain, and they include things like gold, commodities, energy, oil. You're seeing some of Asia's major energy companies listing energy-backed tokens. You're seeing one of Russia's largest gas companies listing gas-backed tokens. We recently saw in Australia, Great Keppel Island was tokenised, and they tried to launch tokens backed by property. So this is really an asset that's going from a speculative base phase one currency into an asset-backed phase. And we're then sort of almost now seeing a stage 3, which is, also the use of blockchains internally for logistics, food safety, health, identification, charity, as reputable and safe ways to track anything from fruit to donations to third world countries to use of energy. Decentralized capital is, our mandate is to build institutional grade services and develop institutional grade assets and bring them to the industry. And when I say institutional grade, I think that's really important. It ties back in with BDO and why they're so important, because when you look at this space, nothing really is being audited. The stuff that is being audited out there, it's done by sort of third-rate auditing firms and small law firms and small accountancy firms, and it doesn't really bring that credibility. Yet everybody in the blockchain and cryptocurrency industry seem to be sitting there thinking, when are the institutions going to come in, and when is institutional money going to come in? And look, if 2% of institutional money came in this space globally, Bitcoin would be worth hundreds of thousands of dollars, and that seems to be the chatter. But there seems to be a lack of education and understanding in that space that institutional money is just not going to come into this space unless stuff's audited. I mean, an institution wouldn't invest in a property fund that's not audited. So why would an institution invest in a blockchain?
So, Jeff, do you think a distinction should exist between blockchain and cryptocurrency assets and other financial products that currently exist on the market?
There shouldn't be any difference, and this is sort of BDO's mindset. There shouldn't be any difference in terms of a blockchain-based company, Bitcoin or other type cryptocurrency, and that as a company or a concept, than any other financial product. So if you're looking at an investment as a whole, you want to know that what is the valuation of it? Is that appropriate? Does it exist? Are there actual underlying assets that back it? And that style of mindset and that type of audit rigor and transparency is what we're wanting to bring to this sector. So effectively, it is: are there tokens in the ex-bullion example? Do the tokens exist? Yes, they do. Are the tokens that exist belonging to you? Yes, they are. And if it's gold or whatever other underlying asset that it may well be, does that gold actually exist? Is it fully there that then backs the value of the tokens, which you think you've bought as the public on the street? And that's the level of independent transparency that BDO brings. So it's quite an exciting time.
I think, and yeah, I mean, Jeff's spot on. I mean, one of the biggest struggles getting into this space was some of the larger firms said to us, look, we can audit you, we'll audit your financials. And I think the biggest issue in this space is you can have your financials audited, but how do your holders actually know that they own the gold or they have rights to the gold? And BDO were the only firm that could actually get their minds around it and say, okay, well, look, we'll do the due diligence on that. We will go and physically verify the gold. We will check that the specific token holders have direct ownership of the gold. All the documents are in place. And, back to opportunities like Great Keppel Island and some of the other property-backed tokens that are popping up in Australian security-backed tokens, and even companies that are tokenizing themselves instead of issuing shares. Their investors or their owners should really have a high degree of confidence knowing that their actual token they're buying actually has a direct ownership in that underlying asset. And that's something that I feel the major firms are really missing in the audit process. It's not about auditing financials at all. It's about giving absolute security to investors, and that's what this is really about, and that's what the blockchain brings. I mean, would you rather buy gold through an ETF and not be sure whether you have physical ownership or a forward contract backing that gold, where that shareholdings record on one computer and one registry, or would you rather buy it having an independent auditor backing up the actual physical allocated bullion you have, and have that registry recorded on thousands of computers around the globe simultaneously as opposed to one as well? So BDO were able to get their mind around that, and I think that's really, really important for the industry and moving it forward.
You're listening to On the Money, which is live around Australia on the Community Radio Network. I'm Daniel Ellison, and I'm joined in the studio by Stephen Moss of Decentralized Capital and Jeff Rooney of accounting firm BDO, and we're talking about blockchain and what it's going to take to provide auditing and assurance services to that space. So, Jeff, is anyone going to be regulating the audits that you perform, or is it sort of a self-regulation? And are you able to sort of share the kind of metrics that you would put forward?
Yes, look, regulation's quite important. There isn't one size fits all. So you can imagine it's a bit like the standard, financial services industry now. There are a raft of players in the general financial services industry, from insurers to banks to superannuation companies to Cayman Islands-based hedge funds. So there's a broad church of financial services companies. So as is the same within the blockchain sort of crypto sort of space. So there is a broad church. So depending on what it is that the company is actually doing in the sector will depend on what regulation they're actually captured by or covered by. So that would be maybe they're an exchange, or perhaps it's a provider of a fund, shall we say, in the space, or it's more of a payments provider. Each of those have separate levels of regime which they would be subject to. The main regulator in this space is ASIC. Now, for those who want to go and do their own research, it's sort of a little bit beyond the scope of this chat now, and I could bore you all for hours, but effectively there is a lot of material that ASIC's been releasing on and off about their views about blockchain and about cryptocurrency, etc., over the course of over the last few years. So it's important that they haven't necessarily landed their full view in this space either. So they're still evolving their thoughts. The ATO is also one for people to keep their eye on, in terms of if you're holding any of these assets directly, for you to be considering, like any other investment, what is the nature of the tax treatment for you in terms of holding on to these types of investments. But effectively, going back to, look, how will BDO provide assurance and audit? Effectively, it will be just as any other audit that we would provide to companies or organisations more broadly. So Stephen mentioned financial statement audits. So obviously there are financial statement audits that are regulated under ASIC, which we would be performing over the actual companies themselves. But then delving into the creation of the blockchain and the smart contracts, what's the code within that? Is it doing what it says it should do on the tin to provide people comfort? Diving into some specific procedures around if Stephen is an investor, if Stephen's bought tokens 1, 2, 3, and 4, is it actually then recorded that he still owns tokens 1, 2, 3, 4, and there's assets that back those? And then looking more broadly into areas of process and control. So any of your listeners who would be investing in major institutional organisations for their super or for their broader investment regime, there are controls, reports and processes that those institutions have, which is the same analysis, obviously slightly different depending on scale, which we look at for providers in this space as well. And then obviously, typically, depending on where you're buying them and how you're buying them, there's all the considerations around fraud, anti-money laundering and corruption, etc. So having the right level of, particularly if you're operating a cryptocurrency exchange, people getting the right level of ID checks, etc. before transacting. So they're the different types of assurance levels that we would provide across the end-to-end spectrum, which is a full suite. So it isn't just limited to, is the company itself viable? It covers that end-to-end spectrum, basically, of the investment life cycle.
Great, thanks, Jeff. And Stephen, what kind of ways have you thought that the government might attempt to regulate or legislate maybe sort of an umbrella kind of regulation package for blockchain? Is that something that you sort of considered and are maybe factoring into future audits?
I think ASIC are doing a great job in this space, given the obvious struggles they seem to have had in the past, keeping up, I guess, with the rate that this industry has been moving. And I think it is a particularly difficult struggle for them, given that, if you are genuinely looking to rip off investors, this is probably the space to do it. And that's a really difficult thing to cope with as a regulator in a new industry like this and keep regulations up to date. It's also a really, really difficult thing to compete with when you're a legitimate operator in this space. And so I hope ASIC keep pushing on in this space. And look, our view on this has always been that we've gone above and beyond in terms of regulating our own products. I mean, when we first looked at launching in, we weren't sure if we needed a financial license. We then thought we need a wholesale financial license. And then we decided that, no, look, let's go full retail financial license, and let's go above and beyond, because we do expect the regulations to tighten. And our thought process has simply been, if we execute this properly, and essentially that all comes back to making this institutional friendly, then when the regulations do change, we'll be on top, and we'll still be sitting around there. I think also it's worth keeping in mind, I mean, the role of ASIC here is really to protect the investors behind blockchain, and back to the BDO product. I mean, that's what we're really doing. I mean, it has been a pretty common excuse in this industry to say, no, we're not audited. And that's okay not to be audited in the industry, because no one really expects you to be, because there's nowhere you can really go to do that. I think having the option in this industry to have a major auditor just cleans out all that crap. I mean, we've gone and taken that excuse away from the market, and that's what I'm excited about here. There is no excuse for any security-backed token or any asset-backed token now for not having an auditor.
And I think that's exciting. If you've got any listeners who are effectively ex-auditors, or aspiring auditors, or have partners or family members who are auditors, you can have some exciting chat, I'm sure, over the dinner table. But effectively, not every audit or every document that espouses to be an audit is the same. So if there's a law firm that tries to issue a document that says that's something that looks or feels like an audit, it's important that people do or get the right support or counsel effectively to read it. Say, is it really an audit? What are they saying that they've done, and what are they not saying they've done? And that's where it was refreshing to be working and talking with Stephen and Decentralised Capital as he said, they want to raise the bar and have to go above and beyond the minimum standard. And so that for us is refreshing, because we want to be setting a sort of a high bar for transparency in the industry. And there are some people in the sector who've come to us asking us to provide certain services that aren't a proper audit, and have asked us to de-scope and descale what we would say we're doing. And we've said, look, thanks but no thanks, because we don't sort of want our brand associated with what I would refer to as potentially substandard levels of assurance that could mislead people effectively.
So speaking of that, Jeff, you mentioned in your press release that you'll be undertaking a range of assurance services, so controls assurance reports, money laundering, counterterrorism, fraud independent reviews, accounting advice, and also board governance support. So a couple of those functions sort of rub up against each other. Do you have things in place to make sure there's a firewall there to make sure that you aren't giving advice to the actions that you're already advising, if you know what I'm saying?
Yes, no, look, I totally understand. So from an independence and conflict management process perspective, as a global firm, we have sometimes, I'll say as a person on the front line, too many hoops to jump through to try to get work sort of done and out in the market. But effectively, we have a lot of checks and balances we have to go through before every engagement, and there's particular Chinese walls where it might be that we don't do a particular service because it would create a conflict. So I'll use the simplistic term of doing versus reviewing. So anywhere where we're helping the client do the doing, then we wouldn't be in a role where we'd also do the reviewing.
You're listening to On the Money, right around Australia on the Community Radio Network. I'm Daniel Ellison, and I'm joined in the studio by Stephen Moss, founder of Decentralised Capital, and Jeff Rooney from BDO, the accounting firm. And they are collaborating to provide auditing and assurance services to blockchain assets and technologies, which they are hoping will really start providing credibility in this space. So, Stephen, I think we know what BDO stands to gain specifically out of this partnership being successful. What exactly does your company want to gain out of this partnership with BDO?
Our company can be split into essentially service side and asset side. To be honest with you, the only reason we went into the service side is because we couldn't get a service. If this was already offered by BWO or PwC or KPMG, we would have just signed up and been a client. But we just had to build it, and we had to create the service to actually build the asset. And yeah, look, that's the bottom line of it. And to date, that's been this. We had to build the cryptocurrency vault to have an insured custody service. And that goes back to the ETF. I mean, when we originally started talking about the ETF, which predated this project, the ASX essentially said to us, great, who's your auditor and where's it kept and insured? And we couldn't tick those boxes. So look, we've had to build it, and we've now got that pipeline. We've got that audit pillar. We've got custody and insurance pillar. We've got the liquidity pillar. And we've essentially got those three supporting pillars to support whatever projects we look to develop in the future.
Just a question for both of you. So obviously blockchain technology is all about transparency. So you're going to be providing audits for our blockchain assets. Are you going to make those audits publicly available to potential investors, things like that?
Yes, look, there's a number of ways which we can make it available to create that transparency. And again, depending on the different, you mentioned a number of services we're providing in the space. Some of those are specifically designed to be available and released to current and potential investors. Others are not, because they're specifically designed for management and or the board of that organisation. But we definitely have a mechanism to make certain audit reports public. And for those who sort of want to Google, etc., and you'll know sort of from our global BDO sort of firm, we've got quite a large footprint internationally. Malta as one of our offices, but given the regulation that's over there in this space is quite advanced, and so as a firm we have some publicly available on the internet quarterly reports we get issued by our Malta firm to give people transparency around existence and ownership behind a particular stable coin. So we look to do something similar to that here. So I think that'll help, because it will mean that people can see the actual reports which they're looking to rely on, similar to audit reports over financial statements, but just going that next layer down. I think the point around the decentralized ledger, the visibility that people have over that blockchain creates is great, and I think that what people then need to remember is the reason that you need an audit then behind that is effectively it's garbage in, garbage out. The benefit of blockchain technology in a decentralized ledger is everyone has their own copy of the ledger, but you need to make sure that the initial inputs are still the right answer, because otherwise we can all have a similar copy of a corrupted ledger. So there still needs to be traditional checks and balances around those key elements of inputs to make sure that what goes into that chain is the right answer.
I just wanted to finish by asking each of you, what kind of thing would you recognize as being a tipping point for blockchain and cryptocurrencies that you think would really have there be some real steam picked up in this space?
I think two things, to be honest. I think auditing's probably one of them, because it will open the doors to institutional investment, and we've always thought that. I think the second is regulation, and when you go around, Australia's pretty lucky. We're pretty lucky here in that the regulators have basically said, hey, if it looks and smells like it's a retail fund, you should regulate it like one, and that's fine. But as I travel, especially through Asia and through Europe, I notice a lot of the regulators are sitting back waiting for the SEC to write some regulations in the US, and I really think the SEC need to do that to really open the doors to the industry. Here, I'd like to see that happen. I'd like to see some progress on that and some transparency on that.
And Daniel, I suppose the only thing I'd add to that is a little bit about, what you're doing here with this program is people sort of building up their knowledge base and there being more general awareness and moving away from the pure, I'll say, arbitrage or fear factor or volatility of one asset class within the blockchain space. People sort of interested or worried about Bitcoin and things that are around that. There are a number of different uses, as Stephen alluded to before. There is that investment and speculative arm, but there's also blockchain technology that is that transactional element arm and an actual utility token. And then there are applications which are non-financial, which are around food security, medical health record, etc., etc. So there's different elements for all of them, and they'll all get different use cases. And I think people having, being comfortable that blockchain isn't just one overarching concept that you can paint with the one brush will be key to help people with dipping their toe in the water.
Yeah, and also probably some real world applications in this space. Gold is one of them, but as we see more securities and assets be tokenized, hopefully we can dispel this perception of cryptocurrency.
And that's all we have for you on The Money this week. A special thanks to our guests, Jeff Rooney of BDO and Stephen Moss from Decentralized Capital for joining me in the studio. A big thanks again to our executive producer, Roderick Chambers. On the Money is produced in the studios of Radio 2SER for the Community Radio Network. You can find all our shows and stories at 2ser.com/On the Money. You can also subscribe to our podcast on iTunes or your favourite podcast app. You can follow us on Twitter, just look for @OnTheMoney2SER, and you can also find us on Facebook. I'm Daniel Ellison. We'll be back again next week to give you the inside running on all things financial. Until then, thanks for your company.